Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a last chance wave here on gold. Let me just get everything in place here. Get the first target at 17.6. Second target's going to be at, well, we can't really go 16.6. The problem with this, with the target at 16.6 where I normally like it, we've got this blue dash line cutting right through here, and we can't trade through that. So the next target's actually got to be at 17. We're cutting that target a little bit short, which is kind of unfortunate, but everything else is setting up perfectly. Now, gold has been falling pretty much all morning, and we've been kind of cycling a little bit, but we cycled up back here, formed a little bit of kind of a head and shoulders, and now we've dumped right back off again. Now that initial move down did set up a nice 1, 2, 3 reversal pattern, but you'd have to be really aggressive to get in that trade because it didn't pull back quite far enough. Now this next trade that we're looking at here, going to make this a little bit bigger, we're just going with a follow-up wave. It's a 4, 5, 6 continuation, but it is coming in as a last chance wave. So this box right here and this first area there, we're not coming into those zones, we're coming into the secondary zone here. Now typically these aren't as high percent of a pattern because they don't really happen that often, so they're hard to kind of statistically test. But that being said, they offer awesome risk reward, especially looking at this wave. It's not very big, right? I mean, you know, we're looking at an initial move. If this was a regular wave pattern, we'd only be going for 6, 7 ticks. But because this is coming in as a last chance wave, we're short at 18.9. Our first target's all the way down here at 13. So that gives us a really nice first target there, along with a secondary target a little bit farther down here of 17.0 as well for 19 ticks. So you can see that even though, you know, these aren't necessarily as high percent, the risk reward is more than enough to entice anybody to really take the pattern. So again, we're filled short at 18.9. Let me just add my trades on the chart here. There we go. So filled short at 18.9, looking continued short. First target at 17.6, second target at 17 even. Now gold has been kind of bursty today, and what I mean by that is it'll just kind of meander around, not do anything, and all of a sudden, boom, and you know, it just slams in one direction or the other. So we're kind of hoping right now that in this case we're in that slowdown period. We hopped in at the highs, looking for that big slap right down to fill our targets. So again, that first target from our entry here, we're looking at a first target of, I believe, is 13 ticks. Second target's going to be a little bit lower down here, just ahead of that blue dash line for 19. So we're taking 3 off at the first one, so that'll give us a total of 39 ticks on the first one, plus another 19 gives us 58 ticks, $580 on the trade. So really nice overall setup that we're looking for, just waiting for the market to kind of cooperate and drop a little bit lower. So we'll be back in a little bit and see if we can get that target filled. All right, we're testing our target. There we go, got it filled. Let's get our stop to break even here. And actually, well, yeah, we'll stick with break even for right now. We're actually getting a little bit of a burst down here. I mean, you can see it kind of meandered around a little bit. And that was kind of that chop slop sort of situation that we were talking about here. It did hold us in. Our stop was more than fine. You could have even locked your stop in a little bit tighter after it made that recent swing high there at the highs and then came down. But, okay, well, I guess we got the second target filled too. Now we're coming into that blue dash line. That was our area of concern. So you can see it is reacting to that level quite aggressively, and that's why you've always got to be a little bit careful. I'm more than happy, you know, dropping off 2 or 3 ticks on the end of my profit target to make sure that I get filled, rather than, you know, missing this whole move and all of a sudden it comes back, stops me on a break even, and then I miss the whole trade, and it's a wreck. So in this case, we did get out a little bit earlier. You know, our target was down a little bit farther, but with that being said, look at this reaction it's having to this blue line. It's a good thing we got out where we did at 17. Otherwise, this would be giving us a big problem. We'd have to be sitting through another pullback. And, you know, if it does drop lower, then great. You know, then if you're holding on to it still, just trail your stop along with it. But in this case, if this comes as a full-blown reversal and it just pops right back up again, then all of a sudden you're stuck with a break-even stop out where you miss this whole move lower. So we definitely don't want to give back 20 ticks here. So we've got 3 off at 13, 1 off at 19 gives us 58 ticks total, $580 on the trade. Nice quick little trade here. But if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.